Ladies and gentlemen, tonight we are witnessing one of the most dramatic developments in Iraq's recent financial history. The Central Bank of Iraq has just announced a surprise emergency intervention designed to stabilize the Iraqi dinar after weeks of relentless pressure and public concern. This isn't just another routine statement from officials. This is a move that carries real weight, one that could shift the balance of Iraq's entire currency battle. For weeks, the Iraqi dinar has been under siege. On one side, the central bank has tried to maintain an official exchange rate to project stability. But on the streets, in the markets, and across the black market currency networks, reality has been far harsher. The US dollar soared past 144,500 dinars per $100 in the parallel market, widening the gap between the official rate and the street rate to levels not seen in years. That gap isn't just a technical financial issue, it's a direct hit to the confidence of the Iraqi people, a daily reminder that the dinar is weaker than the government insists. Now imagine the ripple effects. A father walks into a grocery store in Baghdad with his monthly salary in dinars, only to find that the same food basket he bought last month now costs 15 to 20% more. A mother in Basra goes to pay for her child's medicine, only to hear that the pharmacy had to raise prices because suppliers demanded more dollars. A small business owner in Erbil tries to import goods, but without access to official dollars, he's forced to buy at inflated parallel rates, eating into his profits or raising prices on his customers. This is not abstract economics. It's daily life, and it's getting harder. Pressure has been building on the central bank for weeks. Politicians have faced angry questions. Protests have begun to stir. Social media has been flooded with frustration as Iraqis share stories of skyrocketing costs and shrinking purchasing power. Confidence in the government's ability to protect the dinar has been slipping away. And now, in response, the central bank has stepped in with a surprise announcement. An emergency intervention, 3 words that signal urgency. A recognition that the situation can no longer be managed with slow, gradual measures. This is a high-stakes moment, and everyone is watching closely. So what exactly does this intervention look like? According to officials, it involves 3 major steps. First, the central bank will begin injecting additional dollars into the market through official banking channels. This is meant to ease the shortage of available dollars, making it easier for traders, importers, and businesses to secure what they need without turning to the black market. Second, the CBI has created a new monitoring unit tasked with cracking down on currency smugglers and illegal dealers. These underground networks have been a major force behind the dinar's decline, and the bank now says it will deploy tougher enforcement. Third, the central bank has pledged to review and possibly reform its monetary policy framework within weeks, signaling that this may only be the beginning of deeper changes. Now, on paper, this sounds like a solid plan. More dollar supply, tighter controls, and promises of reform. But the bigger question, the one on every Iraqi's mind, is simple. Will it work? Because history tells us that these kinds of interventions often bring temporary relief but rarely lasting solutions. Injecting dollars can calm the market for a short time, but unless Iraq addresses the structural problems, over-reliance on imports, weak banking systems, corruption, and smuggling, the black market always finds its way back. Still, make no mistake, this announcement is significant. It shows that the central bank understands the urgency of the crisis. It knows that trust is slipping, and it knows that if the gap between the official and parallel markets keeps widening, the dinar could face an even deeper collapse. By acting now, it is sending a message to the markets, to the traders, and to the people that the government is not standing idly by. For the ordinary Iraqi family, this move could mean some short-term relief. If more dollars flow through official channels, food and fuel prices may stabilize. If black market dealers are forced to back down, the street rate might cool off. And if reforms are truly on the horizon, there may even be a glimmer of hope that the dinar could regain some of its lost ground. But again, the danger is in overpromising. If this intervention does not quickly deliver visible results, public frustration could grow even louder. Iraqis have heard promises before, and patience is wearing thin. The credibility of the central bank, and by extension, the government, depends on whether this intervention brings real, tangible change in the markets. This is why tonight's announcement feels so critical. It is not just about economics. It's about trust, stability, and the direction Iraq is heading, and whether this emergency action becomes a turning point or just another temporary patch. Only time will tell. Ladies and gentlemen, now that we've unpacked the central bank's emergency announcement, let's go deeper into what this intervention really means for Iraq's economy, for the markets, and for the millions of ordinary people caught in this financial storm. The first and most immediate effect of the central bank's move is the promise of more dollar injections into the market. On the surface, this sounds straightforward. If there's a shortage of dollars, supply more, and the market should stabilize. But in practice, it's far more complicated. Injecting dollars doesn't automatically guarantee stability. It depends on who receives those dollars, how they are distributed, and whether they actually reach the people and businesses that need them. For years, one of the main complaints about the central bank's dollar auctions and allocations has been corruption and favoritism. Large banks and politically connected traders often get first access, buying dollars at the official rate, then reselling them at higher prices in the parallel market for massive profits. This has not only enriched a small elite but also fueled the very black market the central bank claims it wants to fight. So the real question is, will this new wave of dollar injections actually help the small shopkeeper, the local importer, the ordinary citizen, or will it simply pour more fuel into a system already riddled with abuse? This brings us to the second part of the bank's plan, the creation of a new monitoring unit to crack down on smuggling and illegal dealing. On paper, this is essential. Smuggling networks have been bleeding Iraq's financial system for years, funneling dollars out of the country to neighboring states, bypassing official controls, and undermining every attempt at stability. If this unit is given real power, independence, and enforcement capacity, it could close some of those leaks. But enforcement in Iraq is rarely clean-cut. Too often, those tasked with cracking down are themselves connected to the very networks they're supposed to dismantle. If corruption seeps into this new unit, the problem may persist, and public trust could erode even further. Now, let's talk about the parallel market, because that is where the real test of this intervention will play out. For months, Iraqis have been living with two exchange rates. The official one, controlled by the central bank, and the unofficial one, determined by supply and demand on the streets. Every time the gap widens, the parallel market becomes more attractive, more powerful, and more trusted by the people than the official system. That's dangerous, because it essentially undermines the central bank's authority. If the injection of dollars is strong enough, and if enforcement against smugglers is real, we may see the gap between the two rates shrink. That would immediately relieve pressure on families, because prices for food, fuel, medicine, and imports are directly tied to that black market rate. A bag of rice, a bottle of cooking oil, a tank of gasoline. All of these items move up and down with the dollar's street value. But if the intervention fails, if the black market finds ways around the controls, then the opposite could happen. The gap could widen, the dollar could climb higher, and the dinar could sink even lower, dragging public confidence down with it. And make no mistake, the public mood matters. In Iraq, financial stability is not just about economics. It's about politics, security, and even social peace. When people lose faith in the currency, they lose faith in the system itself. That is why this emergency action feels so urgent. It's not just about stabilizing numbers on a chart. It's about stabilizing the country. Now let's step back and consider the broader picture. Iraq's dependence on the dollar is deep-rooted. Oil sales, which account for the vast majority of government revenue, are settled in dollars. Imports, which fill Iraqi shops with everything from electronics to food staples, are paid in dollars. Even wealthy families often save in dollars as a hedge against inflation. The dinar, for all its symbolic importance, is still tethered to the dollar's strength. This is why some analysts see the central bank's emergency move not just as a short-term fix, but as part of a bigger strategy. A signal that Iraq may be preparing for deeper monetary reforms. Could this be a step toward eventually revaluing the dinar? That's the question buzzing among investors, economists, and ordinary Iraqis alike. A revaluation, or RV, would be a radical move. It would mean officially raising the value of the dinar against the dollar, restoring purchasing power, and sending a powerful signal of confidence. But such a move requires strong foundations, tighter control over the money supply, a crackdown on corruption, a more robust banking sector, and above all, political stability. The central bank's current actions, cutting currency circulation, banning cash dollars, and now intervening to stabilize rates, could be laying the groundwork for such a shift. But whether Iraq is truly ready for that step remains uncertain. Meanwhile, on the ground, reactions are mixed. In Baghdad's currency markets, traders are watching closely, some cautiously hopeful that the intervention will bring temporary relief, others skeptical that it will change anything. In Erbil, importers are already calculating whether official dollar flows will ease their burden or whether they'll still have to rely on parallel channels. In Basra, where protests over living costs often erupt first, families are bracing themselves, waiting to see if grocery prices will finally ease or continue climbing. The challenge for the central bank is not only to act but to act credibly. Iraqis are not strangers to promises. They have heard countless announcements of reforms, policies, and programs that were supposed to bring stability. What they need now is results they can feel, in the price of bread, in the cost of fuel, in the value of their salaries. If this intervention delivers that, even modestly, it could restore faith in the dinar and buy the government crucial breathing space. But if it fails, the backlash could be severe. Let's also not forget the geopolitical dimension. The United States has been closely watching Iraq's dollar flows, imposing restrictions on certain banks accused of laundering or smuggling. Neighboring countries like Iran and Turkey are often linked to cross-border currency networks. So, where does all this leave us? Tonight, the Central Bank of Iraq has made its move. It has chosen to intervene decisively, to inject dollars, to police the market, to promise reforms. For now, the markets may calm slightly, and the headlines may project strength. But the real test will come in the days and weeks ahead, when Iraqis go to buy groceries, when traders seek to import goods, when families decide whether to trust their savings in dinars or dollars. Ladies and gentlemen, this is a moment of truth for Iraq's economy. The dinar stands at a crossroads. Either this emergency intervention restores stability, confidence, and hope, or it becomes yet another temporary patch on a currency crisis that refuses to go away. The stakes could not be higher, and as the world watches, one question remains. Is this the first step toward a stronger dinar? Perhaps even a revaluation? Or just another chapter in Iraq's long struggle to protect its currency? Only time will tell.